Hey everybody. The following videos detail how I became a conscientious tax objector to challenge the unconstitutional actions of our government. First, I investigated the war tax resistance at nwtrcc.org. Then I joined the national tax strike at taxstrike.info. I plan to resist by changing my W-4 to reduce 2026 federal income tax withholding and to add a Schedule C to my 1040 when I file my 2025 federal tax return. These actions are examples only. I am not an accountant, financial advisor, or a lawyer. I am not qualified to give you investment or financial advice, legal advice, or instructions on how to file your taxes correctly. And then these videos are not intended to be any of these things. They are examples only. Hey everybody. Okay, step 1 of my plan to resist. I'm going to change my W-4 to reduce my 2026 federal income tax withholding. Okay, gather up your 2025 W-2 and find the wage amount in box 1. Write it down. Second step, find the standard deduction for 2026. This is the amount that you're going to use to reduce your wage. Right there. Subtract the deduction for single from the wages to calculate the taxable income. Okay, the next step is to get Form W-4 from your employer, from your employer's HR department, or print yourself a copy from irs.gov, or log into your payroll account like ADP. At this point, I need to provide a caveat. If you change your W-4, and you can change it whenever you want, you don't need a life-changing event to change your W-4 amount. You can change it for whatever reason, and you don't have to tell anyone what those reasons are, just that you want to do it. If you do use this example to reduce your taxable income down to zero, essentially, so that your employer stops taking withholding out of your paychecks. At the end of 2026, when you file your taxes, you will probably not get a tax return because you never paid any withholding taxes. So that's just a caveat. If you do this, you will keep your money in your payroll and you'll get it in your paycheck instead of sending it to the government, letting them hold on to it for a year, and then trying to get it back at the end of the year with your tax return. Okay? Let's go to step 2. Okay, as a single taxpayer, you're going to select single from step 1, box C. Step number 2, enter the calculated taxable income that you calculated previously in step 4, part B. The last step is to submit this changed W-4 to your employer, your employer's HR department, or log into your payroll account, like at ADP, and change it there. Once this is done, you should no longer see – withholding taking out of your paycheck each month or each pay period. That means that you are resisting loaning money to the government for an entire year. You're waiting until the end of the year to claim those deductions. Hey everybody, this is how you calculate your taxable income if you are the head of household and taking the head of household standard deduction. Same as before, get your W-2, find your wages, and write it down. Next, find the standard deduction for head of households for 2026. This is the amount you're going to use to reduce your taxable income. Write that down. Okay. Last step is to subtract the standard deduction for head of household from your wages. Now you have your new taxable income. Put on your W-4. Okay. Another caveat for head of households. Head of households get a little larger deduction because it's assumed that they have a qualifying dependent, like a child or a baby mama or something like that, who is relying on them and their income. So they get a little larger standard deduction. That's why this deduction is larger. It shouldn't affect anything else that has to do with your tax filing. All you're trying to do is reduce the amount of money that you are having that is being taken out of your paycheck each pay period. You're waiting until the end of the year to claim your deductions. Next step is to get your W-4. You get your W-4 from the same place that everyone else does, from your employer, the HR department, or printing a copy from irs.gov, or logging into your payroll account like at ADP. All right, once you've got your W-4, you're going to select head of household in step 1 of the W-4. Step 2, enter your calculated taxable income in step 4, part B. The last step is to submit this change W-4 to your employer, the HR department, payroll department, or log into your payroll account like ADP and enter it there. Once you've done this, you should not see any withholding on your pay stubs. You should be receiving your entire wage each pay period. And at the end of the year, remember, because you haven't been sending, because your employer hasn't been sending withholding to the federal government, you may not get a tax return. Instead, you'll be keeping your money all year round and claiming that at the end of the year. Hey everybody, here's how you could resist if you are married and you only have one job between you and your spouse. Essentially, you get to take the married filing jointly tax deduction, which is the largest one there is, and apply that against your single wage to calculate your taxable income. The same assumption as in the head of household. They're assuming that your spouse is relying on your income to survive. Just use your dependent, so you give a larger amount. So, grab your W-2, write down your wage. Okay? Find your standard deduction for married filing jointly. Same amount whether you have one or more jobs, but we have one job in this case. The nice thing about living in Nevada is we're considered a joint property state, so they're assuming that your wife and you are in it together, so they give you a nice big deduction. So write that down. All right, subtract one from the other to get your taxable income that you're going to put on your W-4. All right, same as before, grab your W-4. You get that from your employer, your HR department, or you can print a copy of your W-4 from irs.gov, or you can log into your payroll account at ADP. Once you do that, you're going to select Married Filing Jointly from Step 1, Box C. And then the last piece is to enter the calculated taxable income in Step 4, Box B. And the final step is submitting your changed W-4 to your employer, HR department, or logging into your payroll account like ADP and entering it there. Remember, you do not need a reason to change your W-4, and you don't have to tell anyone if you have a reason, because it's no one's business. You can change it, and you don't need a life-changing event like having a new baby or anything. Usually the only time you would change your W-4 for normal people is if you got married, so that you get this nice big deduction. Or if you had a baby, so you get the deduction for being head of household. But it's pretty simple, and you don't have to give any reasons if you don't want to. All right, once that's submitted, you should not see any more withholding removed from your paycheck, and you and your spouse can enjoy your wages all year round until end of the year when you claim her as a dependent, which she is because she doesn't have a job that you need to claim income for. Hey everybody, here's my plan to resist with my spouse, who I call my girl. I've convinced her that we should both resist, and because we live in the state of Nevada, which is a community property state, whatever I am up to, she's kind of on the hook no matter what, so she figures she might as well go along with me. And it's pretty easy to do. The only difference is that we use the married standard deduction and we share it between our two jobs. So here's how you would do that. Of course, you grab your W-2s for 2025 and you find both your wages and spouse's wages for 2025 and you write those down. Okay, the next step is to find the married filing jointly standard deduction for 2026 and write that down. Actually, you're going to write down half for yourself and half for your spouse, which comes out to $16,100, which is essentially the same as the single deduction for each of you. Okay, the next step is to subtract the standard deduction, half the standard deduction from each of your wages to calculate each person's taxable income. And you can see that there's a little difference in our wages, but we're sharing the standard deduction for being married, filing jointly. So our taxable income is going to be a little different. So we're each going to put a different amount on our W-4. But in the end, when you mash them together on the 1040, married filing jointly, you're essentially doing the sum of this minus the sum of this to get the sum of this. But on the W-4, you each have to supply your own W-4 to your own employer. So that's the next step. Okay. Now you've got each of you have your W-4 that you got from your employer or the HR department, or you printed a copy from irs.gov, or you've logged into your payroll account like ADP to change your W-4. Remember, you don't have to give a reason why you're changing your W-4. It's personal. You don't have to tell anyone why, and you can do it for any reason. Most people do it when they get married, so they can take advantage of being married for deductions. Or if they have a kid, same thing. Head of household gets a larger deduction. But being married with a spouse with a job, there's not much benefit because you're going to be sharing the deduction between your two two paychecks. So the first thing to do is to check step 1, box C, married filing jointly, for both of you. And then, because you are going to be sharing the married standard deduction between the two of you, you're going to check step 2, box C. Otherwise, one of you is going to take the entire deduction, and the other person is going to get the entire deduction. They're going to assume that you only have one job. If you check this, your employer will know that you have a spouse with a job, and they're only going to take half. They're going to only allow the standard deduction to be split between the two of you. So check that box on both forms. And then on taxpayer number 1 or number 2, you're going to put down their taxable income deduction to reduce their wage on their W-4. So let's start with my spouse, which makes more money than me. 20. And over here, all right, that's it. Now you can each take your W-4 and submit it to your employer in the HR department, the payroll department, or you can log into your payroll account like ADP, and you can each put it in there. Once you do that, because you've taken the shared deduction, your employer should not take. You should see all of your wages on your pay stub. They should not be taken out any withholding. At the end of the year, of course, when you file your tax return, you're going to mash your wages and your deductions together into one. At that point, your taxable income will be reduced to 0 if you're lucky. That's usually how this goes. And you will not given, neither of you will given the federal government a loan of your money for an entire year. Every month you'll get your own taxes and you'll save them, and at the end of the year you will claim her and she will claim you as a deduction. So you probably won't be getting a tax return. As a reminder, if you resist paying taxes at the end of the year because you haven't been paying taxes, there's no way to get a return on taxes you haven't paid, so you may not get a tax return. But at least you won't be giving the government a loan for a year. And that's all there is. If you guys have any questions, you can comment on my videos or send me an email, and I'll try and answer them. Thanks, and happy tax season. Hey everybody. This is a follow-up to my plan to resist by changing my W-4. you need to save the amount that should have been withheld from your pay as income tax withholding, because when you file your taxes at the end of the year, you may owe some income tax. You also may owe some penalties and or interest for not paying your taxes during the year. Also, you may need it for unexpected emergencies. I mean, it is your money. Hold on to it just in case. And the biggest thing is, if you don't save it, you're missing out on that interest that you've been missing out on previous years when you weren't resisting. So make sure you save it. And the reason you're doing this is if you do owe some income tax penalties and interest, you should at least be earning interest between now and then and resisting giving them a free loan of your money until then, if ever. The other part is you'll be supporting your local credit union or your local state pension plan like Nest in the state of Nevada. You'll have built a personal emergency fund, and you can use the money to support local mutual aid organizations. You can start your own small business, start earning money on the side. If you do owe taxes at the end of the year, and they want to charge you some penalties and interest for not paying, one of the benefits of the NWTRCC.org tax resisting group is they have a penalty fund that you can join. If you do get yourself into trouble, if you're a member of their fund, they will assist you in paying those penalties and interest. They won't assist you in paying your back taxes. That's on you. That's why you save, just in case. But if there are some penalties and interest, by joining them, they will support you through their penalty fund, which you can check it out at nwtrcc.org/WTRPF /. Hey everybody, this is a follow-up to my plan to resist by changing my W-4. You need to save the amount that should have been withheld from your pay as income tax withholding, because when you file your taxes at the end of the year, you may owe some income tax. You also may owe some penalties and or interest for not paying your taxes during the year. Also, you may need it for unexpected emergencies. I mean, it is your money. Hold on to it just in case. And the biggest thing is, if you don't save it, you're missing out on that interest that you've been missing out on previous years when you weren't resisting. So make sure you save it. And the reason you're doing this is if you do owe some income tax penalties and interest, you should at least be earning interest between now and then and resisting giving them a free loan of your money until then, if ever. The other part is you'll be supporting your local credit union or your local state pension plan like Nest in the state of Nevada. You'll have built a personal emergency fund, and you can use the money to support local mutual aid organizations. You can start your own small business, start earning money on the side. If you do owe taxes at the end of the year, and they want to charge you some penalties and interest for not paying, one of the benefits of the nwtrcc.org tax resisting group is they have a penalty fund that you can join. If you do get yourself into trouble, if you're a member of their fund, they will assist you in paying those penalties and interest. They won't assist you in paying your back taxes. That's on you. That's why you save, just in case. But if there are some penalties and interest, by joining them, they will support you through their penalty fund, which you can check it out at nwtrcc.org/WTRPF /.